Guys, welcome back to my screen. So let's head over to what we have for today. So like I said before, the strategy I normally use, first of all, just draw it out, then I'll also check it out from the chart. The strategy I normally use, if the market is moving downward like this, then like this, let's go for the sell side first of all. Then if I want to take this trade, I'll wait for the market to take the liquidity resting above here, then move targeting this particular area, or it might even surpass this particular area. That is where I normally take my trade on a bearish scenario. Why on a bullish scenario? This is what I normally do. On a bearish scenario, if the market is going towards this particular area, sorry, and all these reactions they happen in the 5 minutes time frame. If the market is on a bullish move, then the market is tracing backward like this, like this, like this. I will wait for the market, like something like this. I will wait for the market to give me a break of market structure, which would be this particular area. Then I will wait for a pullback, either in the feed level, which is 50 or 60.00 with my retracement level, or I'll wait for my point of interest. Those are the two. Then the remaining one is that I wait for what? A fair value gap. That is the way I normally enter the market. Then the market can easily move upward. So these are the two strategies I use in trading the market. These are the two strategies I use in trading the market. And please, if you want to use this strategy, make sure it's aligned with the trend of the market. I normally say this: make sure it's aligned with the trend of the market. If you should look at this market from here, you will know that okay, this market is in a bearish. This is a bearish market. 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 Look at it from the 5 minutes time frame, because what is creating a lower high and a lower low, lower high, lower low, lower high, lower low. That's what the market is creating now. Sorry for that. Don't know what lower high is, let me show you. This is a high, this is a low. This one is higher than this one, so this would be a high, a low. This is a lower high and this is a lower low. This one is a lower high and this is a lower low. This one is also a lower high here and this is a lower low. This one is a lower high. It can even go upward, then lower low. That's the way I normally trade from the market. So what I'm going to be expecting from this market now, I'm going to be expecting this market to just make this particular move, the one I drew at now, this exact particular move. But the market can do something else. The market can do what? Something else. So the strategy I talked about, let's look for it in the chart. So this is my lower time frame. This is my lower time frame. Sure, this is my lower time frame. So if you should look at this place, gold normally does this. I don't really know for other places, but that's what gold normally do. If gold is trading downward, like we already confirmed it, for it to move, for it to continuously push downward, you first of all come and take this, the liquidity, you first of all come and sweep the liquidity level. If you don't know what liquidity sweep is, do it to check ICT, Shami, then mentorship university 2, you see it there. There is a liquidity sweep resting above here. The first market first of all come and take it out before moving downward. Before moving downward. This was when the market took the liquidity. This particular level, market took the liquidity and started moving downward. Almost like all the time, that's what normally happens. Almost all the time, that's what normally happens. If you look at this one, there's liquidity sweep resting above here. Yeah, market took the liquidity sweep from here with that great candle. This is also a doji. This is also a what? A doji. The reason why I entered from here, I was also looking at this liquidity sweep here. The market took the liquidity, then I entered from that particular level. Then I came out from this level, but the market pulled down mysteriously, like nothing happened. I don't even know why I go traded like that last week, like nothing happened. So anyways, let's continue. That is the way I normally take my entry criteria. That's what I'm sharing now. I would still like to share one of the higher time frame, but that will not be for today. Just the one I normally take whenever I'm entering the market. Whenever I'm entering the market. So let's see this market now. Let's see this one. Although this one I took a loss on this one. This was what I was explaining. The market broke this structure, which is market structure shift from this particular level, then move upward. The market pull back. It pull back. If I should measure it now, that is not really a point of interest. I must say the truth, that is not really a point of interest. Neither is it what's it called? Is it the fair value gap? But let me see. Okay. So but this hits the 0.5, which is also 0.50 Fibonacci retracement level. It hit it, then it went upward. That is the analytic. But please, you make sure this particular strategy it's aligned with what is currently going on in the market. It's aligned with what is currently going on the market. Otherwise, you might regret it. That's just it. You might regret it as a person. If you should look at this one, same thing also happened in this particular level. Same thing also happened in this particular level. The market structure shifts, then it pull back. Then it move up a little bit, then pull back. Then what happened on the market side was moving upward. That is the way normally happen. So if you should look at this level I took here. Sorry, I'm kind of diving back to explain. For the bearish move, market took at this liquidity sweep level. The side was moving downward. Same thing here. Same thing there. Market took at this liquidity level. This level here. Then market side was moving downward. The reason for that is because if you should look at something, whenever market gets to that particular level, whenever market goes to this particular level, it reversed, touched here, everything went down, touched here again, everything went down into this thing. It was just bouncing here. So that was what really happened at that particular area. So let's look for one more. I won't say this one is but I took a loss on this one. I also took a loss, but the liquidity sweep was there, liquidity sweep area was there. So this ought to be, but when I took this loss, I was like, okay, this market was already moving up. This was supposed to be a sell. The same was supposed to be a sell. That's why this was a liquidity sweep level. Because the market is still on the bearish. If you should look at it, the market has been creating a high, a low, lower high, lower low, equal high, then a low, lower high. Then the market not created lower low, yeah, I must confess. Then created a lower low, then took out the liquidity sweep level. Market should get to this particular place again. So look at this liquidity sweep level. So that's the way the market normally works. That's the way this particular good market, that's the way it normally works. So what Jesus, that's the way it normally works. So what I'm just going to be expecting for the opening of this week, just for the market to push, I'm going to take out this particular level, which is level. Let's even get to this place before it starts moving downward. That's what the market is expecting. So I hope I've been able to teach you guys my entry model or my simple entry model. So that's the one I take trade on gold, and it works. Although not 100%, no strategy works 100%. With time, you get used to it and start working for you. Proper risk management is very important, very vital. So, as it, please, if you've watched up to this extent, please do it to click the subscribe button, then like this video, comment, and also share. If you are doing that, you are helping the YouTube algorithm to make my video visible to others. You are not paying money if you should subscribe. Please do well to subscribe. Hit the subscribe button, and do have a wonderful trading week ahead of you. Peace and love. Bye bye.